President Trump says we have to run the risk, and the markets appear willing to do just that. This is Bloomberg Wall Street Week. I'm David Westin. Welcome back. We knew it was coming, and yet it shocked us nonetheless. 20.5 million Americans losing their jobs in just 1 month, and every one of those jobs represents a family that has been upended. So it's hardly any surprise that President Trump has said that we must get the economy going again, no matter what, and he recognizes there are certain risks involved in doing that, even if it means certain health and certain loss of life, potentially. It really seems an unthinkable choice, really, but let's be honest with ourselves. We know that sooner or later we have to get the economy going again. We also know that it's going to entail some risk. The question is how much risk and how best can we manage that risk? And so we begin tonight with what we're told is a painful choice between tens of millions of people out of work on the one hand, and on the other hand, those whose life could hang in the balance. And to help us address that question, we welcome now Wall Street Week special contributor Larry Summers of Harvard. He was, of course, Secretary of Treasury. Larry, thanks so much for being back with us. We've talked about this. Obviously, we want to be cautious in really restarting the economy again. At the same time, when you see that many people out of work, doesn't it mean we have to get going?
It conveys that we've got to need to do something. We've got to make sure those people are able to continue to live, which is why very, very strong unemployment insurance that's fortified for this moment is going to be absolutely essential, and why the Congress is going to have to move to extend what's been put in place so that it's securely there for people that's as long as necessary. It says that we need to move with all deliberate speed, but if we do it in a way that starts the pandemic up again, then in the end, the people aren't going to come back to their jobs because they're going to be afraid to go to work, and the people they serve in stores or restaurants are going to be afraid to go out of their houses. So we've really got to make a priority out of doing what's necessary to enable us to move forward. And that goes back to masking, it goes back to testing, and it goes back to contact tracing. And we're not spending 10% as much on those things as we are on the relief efforts. And that's something that we're going to need to fix if we want to be able to have a viable economic recovery. Hope, David, is not a strategy. And simply letting us open up in the hope that more people will be hired is probably a prescription for getting a second wallop from this virus. And that's not going to serve either economic objectives or moral objectives. But yes, we absolutely can't just accept this. It's no argument for fatalism, but it's an argument for the right kind of economic strategy. But the first plank in that right economic strategy is an aggressive health strategy. And unfortunately, we're still not seeing that.
So we heard from Larry Kudlow this week, and he said that as a practical matter, we will never have to shut it all down again because we've built up so much infrastructure since the epidemics first came here, that we now have the wherewithal that even though there will be flare-ups, the president admits to that, we'll be able to contain it. Does that sound right?
Sounds like nonsense. It sounds like something he wishes is true. I mean, talk about contagion. The president's penchant for confusing what is with what he wants to, with what he would like to be true, seems to be contagious to the people who work for him in the White House. Unfortunately, we don't even, at this late date, we can track a presidential election every day. Pepsi can track the sale of Fritos every single day. The government of the United States of America cannot track every single month or every single week the incidence of a pandemic. We don't have the data. We've got data on how many people have been tested positive, but since we don't have tests for most people, that data is telling us as much about how many tests there are as how many people have the disease. It is incredible that in this age of data science, of social media, of information technology, of artificial intelligence, that the most rudimentary kind of tracking information is lacking, and that we are being thrown back on what was the 14th century solution to the plague. Everybody go to the country and stay in their own houses and not meet anybody they don't live with. It is extraordinary to me, and I don't know what Kudlow's talking about. Show me some infrastructure that the administration has developed. They've turfed the problem to governors who have lacked the necessary resources, and some are doing better than others. But the stunning thing is the plateauing of this virus. And so, yes, it's true. We're not going to ever, I anticipate, have another month when we lose another 20 million jobs. But if we want the better half of those 20 million jobs to be coming back, we need to get on our horse and do something.
So, Larry, everything you say raises the natural question, why? We have a lot of people in the private sector, the public sector, even charities such as the Gates Foundation, who are devoted to this. Why aren't we fixing those problems?
There's an obvious answer and there's a deep answer. The obvious answer is cussed incompetence. And we've just got vast amounts of sort of inconceivable levels of incompetence at the federal level, and that needs to be said before anything complex is said. But there is a complex problem. Take the area of tests, David. If you had a potential test that you thought was really good, that was cheap, that used saliva, that could be mass produced, and you were thinking about producing it, you would need to know one of two things. You would either need to know that your test was going to be selected and you had a high confidence that you'd be able to go into vast production with it, and then you'd be willing to do it. But if you thought that there were a lot of people trying and you might win the lottery, but more likely than not, you wouldn't, you'd need to know either that you were going to be insured for your costs if you didn't win the lottery, or you'd need to know that if you did win the lottery, you were going to win some kind of massive surprise. But in the decentralized system with 50 states that we have now, people thinking about developing those tests know that they won't get reimbursed for their costs if their thing isn't selected, and that if their thing is selected, they won't be allowed to make massive profits because it'd be immoral to profit on a huge scale in the midst of a national emergency. And so the incentive to drive something to completion just isn't there in the way we're managing this. We need an aggressive federal program that encourages every development and reimburses people for their costs. And when they don't, and provision for providing a big reward for people who develop ultimately successful vaccines. If we had that, we would be doing much better. But look, to have any kind of environment for doing anything succeed, you need signals that have some character of constancy, some predictability. And no company could effectively manage a supply chain if its CEO was announcing different things on odd number days and on even number days. And that's the situation that the federal government has us in right now.
Yeah, federal procurement program. It's a big goal. I'm not sure that we're headed in that direction necessarily right now, Larry. And I suspect it would take an awful long time to get it up and running as a practical matter. But it is an idea, and certainly we don't seem to be getting where we need to go right now. We need to get back and running. And if we're going to save some of these jobs, we're losing so terribly many of them. Thank you so much to Larry Summers. He's our special Wall Street Week contributor. He is, of course, a university professor at Harvard, and he's former Secretary of the Treasury. Coming up, we hear from the Democratic leadership in the Congress. Senator Dick Durbin of Illinois and the Speaker of the House, Nancy Pelosi.
If we decide to give half a dose of medicine to the American economy, we're going to plunge into a depression which is much more costly than anything that's being envisioned.
As we take up this fifth bill, we're following the path of what was in the other bills.
This is Wall Street Week on Bloomberg. Welcome back to Wall Street Week. I'm David Westin. The Senate is back in session, and as much as Congress has done already to help the economy, there's more work left to be done, including aid to state and local governments to help the most vulnerable to the pandemic. Unfortunately, they often include the poor and people of color. That's something we talked about with Senator Dick Durbin of Illinois, Senate Minority Whip.
Started asking the question when people came in and said they were infected. Took down the information, and we found that disproportionately African Americans, now Hispanics, are coming up with dramatically larger numbers than we expected when it comes to the illness. A friend of mine back home put it well, I thought. He said, this coronavirus is not going to break us, but it's going to teach us about what's broken in America. And what's broken clearly is our healthcare system. We've got to reach the point in this country where everyone has access to affordable, quality health care. We certainly don't have that at this moment.
There's talk now about the Democrats on both sides of the Capitol Hill working on a new round of support for the U.S. economy. What is essential in that new round when it comes?
Well, there are several things that I think we ought to keep in mind. The early investments we made of $2.7 trillion are unprecedented, but they were really geared toward the economy moving forward starting on July 1st. That's when the unemployment benefits start to end, at least the federal boost. That's when we see an end to the small business loans that are being forgiven. But I think that's an optimistic scenario. Most of us understand that the problems aren't going to end as of July 1st. We'll be lucky if we start to really turn the corner by then. So we can't get weak-kneed at this moment. We've invested in this economy to avoid a depression. We have to continue to do that. I would put additional investment in helping state and local governments through this difficult period. I would certainly do my best to help the healthcare workers with the hazard pay. We definitely need more testing. That is the key to reopening the economy. Those are the starting points.
So at some point we're going to have to pay for all of this. We heard from Larry Fink yesterday of BlackRock saying that he thinks that corporate taxes are going to have to go up. Is he right?
I don't want to get into that conversation at this moment. At this point, we're trying to stabilize the patient, for goodness sakes. Let's not talk about the long-term care issues, and we know that we will have to face them. But if we don't do this right, if we decide to give half a dose of medicine to the American economy, we're going to plunge into a depression which is much more costly than anything that's being envisioned.
That was Senator Dick Durbin of Illinois. But if there is to be another major move to shore up the economy, Speaker Nancy Pelosi wants to make sure it starts in the House of Representatives. And we asked her why.
The Constitution calls for that. The Constitution says that all appropriations bills must originate in the House. In the bill that the Senate did, they used a House bill to do that, but that was the interim bill. The bill of consequence will begin in the House of Representatives, and it is imminent. We'll be having something soon.
So what is essential from your point of view as you go into this? Because you said you wanted to be bipartisan if possible. What is essential for you to have included in this bill?
Well, let me just say that I'm very proud that our first four bills on this subject have been all bipartisan, overwhelmingly bipartisan. As we take up this fifth bill, we're following the path of what was in the other bills. For example, we had state and local in the first CARES bill, CARES 1, and that is what we have in this bill. Honor our heroes. Police and fire, healthcare providers, transit workers, teachers, all of the people who, postal workers, all of the people who make our system work, and in many cases risk their lives to save other people's lives, and now they may lose their job because of the revenue loss as well as coronavirus costs that states and municipalities are suffering. So A. B, if we were to open up, the key to opening up, to unlocking the lockdown is testing, 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 tracing, 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 treatment, treatment, treatment. We have to do that. Science requires it. Everyone agrees that we have to. It's a health issue that is going to solve the financial issue as well. And then third, we want to put money in people's pockets. Now, there's some issues that we just don't, that are philosophical, that we haven't been able to crack, and that is food stamps, SNAP, the SNAP program. For some reason, that's not something that we can get the other side to agree on, but we have to do it, and the American people know that we have to do that.
Madam Speaker, you said that for some reason you can't get the Republican side to move on food stamps. Can they get you to move on some of the things that they want, such as payroll tax? That's something President Trump keeps talking about, even capital gains tax. Are you willing to put on the table at least some adjustments in taxation?
Well, let me just say this. If you want to compare the need for us to change the capital gains tax, which once again ignores the fact that there are people in our country that are hungry and that there's some equivalence to that, I respectfully disagree. There are certain things that are urgent. They're urgent. To have a discussion of tax policy, save that for another day and do it in a bipartisan way. But don't draw any lines in the sand. We're not. He shouldn't.
Madam Speaker, it's clear you find this urgent. You've said why you think it is urgent. On the other hand, we hear from the Republicans, some of them saying, well, let's wait a while and see how the first few bills work themselves out. Can you give us a sense of timing? I know that you're going around to chairs and talking about what should be included, but could we expect a plan by, for example, next week?
We could, because I disagree with our colleagues. I could totally disagree. It is urgent. People are dying. People are suffering. We want to open up our economy. People want out. But the key to getting out is the testing. These are all related, and they're related in every way to data. They didn't mind coming back with more money for this or that without any data as to what was working best. But when it comes to feeding people, they can wait for that. And that's a matter of the health and well-being of the American people. So I completely disagree with that. While I think it's important to learn from what legislation we pass in every case, but that should not deter us or block us from meeting the urgent needs of the American people.
That was Speaker of the House Nancy Pelosi. Coming up on Wall Street Week, this economic crisis has shown us some of the glaring inequalities in financial services in this country. We talk with Mastercard Vice Chairman Michael Froman about what can be done about those.
There are about 1.7 billion people around the world who are still excluded from the financial system. Most of them are in developing countries, but there are people right here in the United States.
This is Wall Street Week on Bloomberg. Welcome back to Wall Street Week. I'm David Westin. When Congress approved $1,200 payments to most Americans, some people got their payments much faster than others did. It depended on whether they had direct deposit relations with the IRS. This pointed once again to the plight of millions of Americans who are unbanked or underbanked. We talked with Mastercard Vice Chairman Michael Froman about the nature of the problem and what can be done about it.
There are about 1.7 billion people around the world who are still excluded from the financial system. Most of them are in developing countries, but there are people right here in the United States and in Europe who are also excluded, people who are unbanked or underbanked. There are estimates that in the U.S. there's somewhere between 30 and 40 million people who have no formal relationship to the financial system. So a lot of what we're focused on, and it will vary from country to country as it has over the last 5 years, is figuring out how best to reach them. Sometimes it'll be through government disbursement programs. And for example, millions of people will get their economic payments from the government on one of our cards. Sometimes it'll be working with fintechs who have a capability of bringing people into the financial system that didn't exist 5 or 10 years ago.
Give us a sense of what you're seeing with Mastercard, by the extent to which small businesses are drawing down on their credit as a practical matter, putting it on their credit card, or for that matter, just not buying things at all, maybe with reduced activity.
Small businesses, as you said, are particularly hit by this crisis. We've committed $250 million of products and services and financial support over the next 5 years to small and medium-sized businesses to help them digitize, bring them into the e-commerce environment, make sure that their transactions are safe and secure from cyber attack and from fraud. And that's going to be an area of continued focus in the United States and around the world.
Michael, one of the questions we're asking almost all of us right now is, to what extent is this pandemic changing what we're going to be as opposed to just making us get there faster?
Well, I think this crisis has underscored just how important digitization is for individuals to be able to transact, to get payments from their government, for small businesses to be able to be in contact with their customers through e-commerce and to do transactions in some form other than cash. So that trend was already underway, but I think this has accelerated it.
Okay, last question, Michael. I want to draw from your experience as the USTR, the United States Trade Representative, as well as your experience now at Mastercard. Do you have any concern that as people are looking around the world and saying maybe globalization went too far, that maybe some of the borders being put up in some places are not just for immigration, not just for trade, but could be actually for credit and for payment systems?
Well, we do have a concern that countries will sort of resort towards nationalism, nativism, protectionism. Governments have absolutely legitimate interests and concerns about privacy and wanting to make sure that they've got the best possible financial infrastructure in the country. But one thing that this crisis underscores, for example, is just how important it is that there be really robust systems with cybersecurity protection, with anti-fraud protection, and that you're able to see trends in data across countries so that you can, whether it's the IMF or the World Bank or other institutions, take action to make sure you're addressing those who are most vulnerable. And having a global payment capability, having access to multiple countries allows that to happen.
That was Michael Froman, Vice Chairman of Mastercard. Coming up on Wall Street Week, how technology is helping us remake our lives in the time of the coronavirus and how it can do a better job.
It's about bringing hybrid cloud technologies so they can deploy the workload wherever it's fit for purpose.
This is Wall Street Week on Bloomberg.
Life in the time of the coronavirus is changing the way we do so many things, and most of them are helped by technology.
I think the broader trend long term for tech is how behavior is changing and how tech is facilitating that change.
Tech is certainly changing the way we shop, particularly for our meals and our groceries. But maybe even bigger than the change in our shopping is the change in how we do our work, with many of us using the telephone and virtual private networks provided by our companies.
We have an enormous growth in the network with 800 million calls a day. We've seen it 50% up on VPN, people working from home.
And how many video conferences are we all on each day as we crowd on services like WebEx and Zoom?
We launched both free cloud security offers and free WebEx offers. And in the first 24 hours of putting that offer out, we had 240,000 new users sign up.
We're even going to our doctors virtually as telemedicine explodes.
Fundamentally, at the end of the day, it's a whole different way of practicing medicine.
And IBM is using supercomputing to help us find a vaccine for the virus that sent us all home in the first place.
What it has done is it's really accelerated the starting step. So instead of waiting for a year to come up, or 2 years or 3 years, we've got it in a couple of days.
This week, IBM also announced new ways it can use technology to help support some of the enormous weight we are putting on IT in this time of social distancing. I talked with IBM CEO Arvind Krishna about the ways it's trying to meet the needs of its customers, needs that no one could have anticipated.
As we've all shifted to remote work, the need for digital technologies, the need for cloud, the need for AI has accelerated. As you pointed out, our audience went from 30,000 to 87,000. I do believe that's a reflection of the acceleration that our clients are seeing in adopting these technologies. If we look at cloud, it's a great way to be able to reach your clients virtually, to be able to get all your employees connected back to the enterprise in a remote and virtual way. If we look at AI, it's about the only way to get the extreme automation to be able to handle the workloads that are going to be thrust upon us. And that's why we're making so many announcements at this conference in both those realms, as well as the client interest that we can see with the people who are attending these sessions remotely.
So let's talk about those clients, because you talk to them every day. We've all become so dependent on this technology. What are the things you're hearing most from your clients about what they need, what changes they need, what improvements they need, and what are you trying to do to address those?
It's the same story we hear from everywhere, whether from people in the airline industry, insurance, banking, telecom. It's about bringing hybrid cloud technologies so they can deploy the workload wherever it's fit for purpose, and then they can use AI to not only do extreme automation, which helps take cost out, but to actually make the experience even richer for all their end clients. And that's why we begin to see the infusion of both those technologies going forward. A quick example, one of the products we'll announce here is in the category we call AI for IT. And the product is called Watson AI Ops. Outages in IT cost the industry about $265 billion. But that's, if we react after the fact, that cost is still there. If we can begin to predict what may go wrong and be able to put it right in the workflow, right in all the collaboration tools, and fix it even before it happens, that brings huge power, unlocking the potential of AI for our clients. And that is something we really, really are excited about, in addition to the other hybrid cloud technologies we're also bringing out at this conference.
So Arvind, I must say, those of us who are working from home and experience some of the glitches that happen are eager to have those corrected. When will that product be available? Will it really redeem some of the situations that we have where our system goes down? There's some problem, we have to reboot it, things like that.
That product actually is coming out now. We're announcing it at the conference in May, and people can start purchasing it now for deployment in this quarter, meaning before the month of June. So that is a great, great power. But to touch a little bit more on AI, if you look at AI and its impact on COVID, something we're all unfortunately suffering from right now, when I look at medical research in India, I look at government services in Poland, I look at hospitals in the United States, and these examples go across dozens of countries, we can all begin to use intelligent AI assistants to really take away and triage out a lot of information that people are looking for.
So Arvind, you make a very important point there, mentioning various countries where this could be applied. The situation has been global when it comes to internet and digital. At the same time, even before the pandemic, there were some countries that are trying to draw some borders when it came to data, when it came to some of the internet's issues. Are you concerned, do you see any indications that the pandemic problems that we're seeing may actually increase the resistance to flows of data and information across borders?
Look, David, I'll sort of begin with my perspective. Of course, economies are always going to, and nations are always going to try to advantage themselves. But when we step back, I think both global trade and the free flow of data have shown that the entire economy, the global economy, gets better and everyone benefits. I think it's a false dilemma when people think about a win-lose. It's not a sports game where it's a win-lose. It's a win-win if we can increase the size of the pie for everyone. Now, I'll acknowledge that should come with regulations, that should come with protections around IP, but the free flow of goods and the free flow of data is what unlocks the potential of all of this for everyone. And if you look right now, actually in the pandemic, I'm encouraged that people are cooperating more. People are taking advantage of both cloud and computing capabilities from everywhere. The sharing of science research has increased. So there are some positive signs amongst all of the emotion that naturally accompanies such a crisis.
Arvind, that's one of the things we hear about, the cooperation even among competitors, because this is a true crisis. Is there any way to institutionalize that? Because there's a tendency for humans to respond to crises, but then when the crisis goes away, they go back to their own ways of doing business.
So, David, I think public-private partnerships have paid off so much, not just for the nation and for the government, but for private enterprise as well. I I mean, if you look at the space program from the 60s, how many technologies came out of that, whether it's Teflon, whether it's fire retardant suits, whether it's the ballpoint pen, whether it's semiconductors, the integrated circuit. I think we can actually lay a lot of credit on that for the public-private partnerships created in the 60s. We can look upon the internet, if you look at the 80s and 90s, as another example which has benefited everyone. And one that we are particularly excited about in high-performance computing is the public-private partnership sponsored by the White House, IBM, the national labs, and many nations, which brings high-performance computing in favor of solving COVID-19, the high-performance consortia.
And Arvind, finally, it strikes me that you're coming up on your 1-month anniversary as the CEO of IBM. Now, you were prepared. You came from IBM. You ran the cloud. You knew the company well. At the same time, this is a curveball that no CEO really could have anticipated. As you look back over that first month, what were the biggest surprises, biggest challenges that you found?
Well, the biggest surprise for me is the extreme positivism and the way that every IBMer, or over 300,000 people around the globe, have risen to the challenge. Over 95% working from home, no client delivery missed, every deliverable met. People really embracing this, including work from home pledges on how we all work together as a team. That's the real positivism. And I get the same reaction from so many of our clients also, who are so appreciative of the work we do for them, both now and in the future. Now, the surprise. Look, none of us can predict where this crisis is going to go. Certainly, I hope that its impact will be limited, both in scale and scope and time, but it could go on. And the surprise part is that we now have to plan for so many scenarios that were unforeseeable even 3 months ago. And that's sort of the negative side of it. But I'm an optimist. I do believe in the power of technology and in the power of innovation, and actually in the spirit of capitalism to take us beyond this and to be able to lift us out and into a more positive future.
That was Arvind Krishna, CEO of IBM. Coming up, GM had a better than expected first quarter, but what's coming up next? We talk with Chief Financial Officer Dhivya Suryadevara.
We are marching ahead in our plans with EVs and AVs. We're committed to an all-electric future.
This is Wall Street Week on Bloomberg. Welcome back to Wall Street Week. I'm David Westin. GM reported its first quarter earnings this week, and it surprised just about everyone with some very strong performance in the quarter. At the same time, it added more cash to what was already a very solid balance sheet. I spoke with the Chief Financial Officer of GM. She is Dhivya Suryadevara, and I asked her what drove the performance in the first quarter and what comes next.
The way to characterize it is the company entered into this from a position of strength, and really the numbers in the first quarter prove that. And you saw our performance from an EBIT adjusted standpoint. We came in at $1.2 billion, which did include an impact of $1 billion and $1.4 billion from the pandemic. So in terms of what drove that, it's the actions we've taken over the last several years to strengthen the business and reduce our cost structure and address a number of underperforming businesses. So that's on one side. And the other side really is the continued strength of our truck portfolio. The truck segment has stayed surprisingly resilient through the whole crisis. And on top of that, our new product portfolio has done exceptionally well. And within that, we've gained share as well. So putting it all together, I would say the business in North America specifically has been performing really well going into this. And it's allowed us to weather the first quarter in a better way.
Yeah, I see your pickups are up like 27%. Your Silverado and the Sierra from GMC are doing particularly well. Where are you on inventory on that? Can you keep up that sales pace?
Yeah, inventories are something that we're watching. We are well positioned on most car lines. And as you know, we came out of the strike in later part of last year. And we have had lower, leaner inventories. And it's frankly, it's going to be helpful in a scenario where SAAR ramps up slowly, looking at it. And from a pickup perspective, we do find ourselves in a situation where we have lower inventories. But the good news is the dealers gotten very experienced in managing through the constraints that they're seeing in the product and how to dig deep into inventory and still maintain sales. So that's the good news. And as we think about the plans returning to work that we're targeting May 18th, that should help us address the shortfall from an inventory standpoint.
Staying with the first quarter just for one more, what happened in China? Because the Chinese auto industry in general has been really weak going into the pandemic. What did your first quarter look like in China?
Yeah, in China, actually, we had a loss of $200 million. But important to put that in context, that was achieved even with a 60% reduction in wholesale. And that really demonstrates the resilience of China business during times of a downturn. Similar to what we're doing globally, we took a number of austerity actions in China that helped mitigate the impact of that. And now, as we're looking at it, Q1 was the low point in China. Obviously, they've had their own cadence from a virus standpoint in terms of when they were impacted. And following the February trough, if you will, the market started to pick back up. March, it was better than February, and actually early indications about April is that the industry is down single digits. So it looks like we're seeing green shoots in China.
GM announced its first quarter earnings. It also announced that it took down some money from some revolving credit lines, something like $3 billion in the automotive, another $2 billion in GM Financial. That's after already amassing something like $33 billion in automotive liquidity. As you look forward, Dhivya, what tells you you're going to need that extra money?
So if you think about our liquidity, we've always, in the last several years, said we want to run a very strong investment-grade balance sheet. And that's actually come in handy during these kinds of times. And as you quoted, we did end the first quarter with a very strong liquidity position of $33.4 billion. And David, it's difficult to anticipate what's going to happen, but we are taking steps to protect ourselves, whether it's austerity or, like you mentioned, revolver and suspending dividends and share repurchases as I would say, precautionary measures to make sure we have additional layers of liquidity. We are comfortable with our liquidity position now that will take us well into Q4, even in a scenario with which is pretty onerous of like zero production. And obviously, as we talked about the restart, when we have a restart, our liquidity levels will recover from here. So I would say these actions are precautionary and proactive actions to make sure we have additional liquidity buffers in place. So what we're focused on now is to safely restart the plants and get the production up and running.
So this pandemic comes along at a time when the auto industry and General Motors were going through a transformation, a fundamental one, to autonomous and electric vehicles. You've been investing quite a bit in both of those. Are you changing your investment plan on that? Do you have to put that to the side while you deal with the after effects of the pandemic?
Absolutely not. We are marching ahead in our plans with EVs and AVs. We're committed to an all-electric future, and all the plans that we've outlined recently in our Capital Markets Day, as well as our EV Day, with respect to the products, the exciting products that are going to be rolling out, we see little to no impact on any of these. The capital actions we're taking and the austerity actions will not impact the programs that you just outlined.
That was GM Chief Financial Officer Dhivya Suryadevara. Coming up, we talk with Cathie Wood of ARK Investment Management about the continued leadership of tech and the role of active versus passive management in a coronavirus world. This is Wall Street Week on Bloomberg. Despite all those weak economic numbers, in fact, the equity market's been holding up pretty well. And particularly that's true for the NASDAQ and particularly for some large technology companies. We welcome now somebody who spends her life in investing in tech. She is Cathie Wood. She's the Chief Executive Officer and Chief Information Officer of ARK Investment Management. Cathie, great to have you back with us. Thank you so much for being here. Give us the investment proposition for tech right now in this age of the pandemic.
Well, as I always say, that innovation tends to gain traction during times of crisis. it gains market share at a much more rapid rate than would normally be the case. And we're hearing many of the companies that we follow saying that it's almost as though we've compressed 3 years of technology progress into 3 months. We're seeing that in real estate with Zillow and Redfin. We're seeing it in education with 2U. We're seeing it with some of the infrastructure providers. The obvious plays here are, of course, Netflix and Amazon. Retail online is going to gain much more share here. But the infrastructure providers are some of the stocks that have had massive moves this week, like Twilio. We're seeing it with 3D printing, spare parts to satisfy shortages. We're seeing it with collaborative robots for social distancing. Across the board, we're seeing companies saying, this crisis is a horrible thing for our country and for the world, yes. But in terms of catapulting innovation forward, this crisis is doing just that.
Cathie, is it more or less affecting tech overall? Is this sort of an ETF play, if you will, or is there some dispersion? For example, we hear a lot about big tech. What about small tech? Or are there other sorts of dispersion differences within the tech sector?
It's been interesting to watch small caps. They have underperformed. And I think a lot of that has to do with financial resources and fears about the future. Will they have enough in the way of resources to get from here to there? So that might be a part of the problem. Our smaller cap companies seem to actually be picking up here because I think investors are looking at the bigger infrastructure players and they're soaring, and they're saying, what else is out there? What other companies are problem solvers out there? So we are now beginning to see the smaller cap names pick up. And that's also confidence building in a way, because I think the fear, the smaller companies are going to have a tougher time getting through this difficult period. The fact that they're now picking up, I think, is confidence building, not only for us in terms of our portfolios, but I think generally, I think there's light at the end of the tunnel. We're hearing that from a lot of companies.
Cathie, we've talked to you in the past about Tesla, a stock that you have liked quite a bit. We just heard from GM's CFO, Dhivya Suryadevara, that they're not backing off an investment in EV. How does this pandemic leave Tesla?
Well, a lot of investors are wondering if the severe decline in oil prices will disadvantage Tesla. And the stock was a little tentative for a while there. However, according to our analysis, our research, the total cost of ownership of an electric vehicle, especially a Tesla, is lower than that of a gas-powered vehicle if you give it 3 years. And the most important variable there is the trade-in value for cars. Tesla's trade-in values, its residual values, are holding up much better than the residual values or the trade-in values for cars. 90% for gas-powered cars, 90% of all cars, new car purchases, involve a used car. And what's happening here with Hertz and Avis is they are in such financial difficulty that they have been forced to sell some of their fleets into the used car market. So the used car prices have started dropping at an accelerating rate, which means that the residual values of cars, or the trade-in values, are dropping accordingly. So that the residual value going down that much is actually a plus for Tesla, whose residual values are holding up.
And finally, Cathie, give us a thought or two about biotech, because obviously we need a lot of help right now as we try to develop tests, develop vaccines. What's the situation with biotech?
Yeah, what's been incredible about this period is two areas that have been considered either commoditized or not worthy of investment: vaccines and tests, diagnostic tests. Are suddenly, they've got an incredible umbrella here, a political umbrella. They used to be punished regularly because of attempts to get drug pricing, down, all kinds of healthcare pricing down. But we realize that we've starved and we've left to other countries the manufacturing R&D associated with vaccines. That is changing. You've got Moderna out there, just went into phase 2 trial for COVID-19 today, the most rapid advancement into phase 2 that any vaccine has enjoyed. You've got Arcturus and Inovio out there, all of these in RNA and DNA vaccine technology. This has never been done before. And so the budgets now being allocated to vaccines, we haven't seen anything like this for 20 years, since SARS 17 years ago. And then on tests have always been considered a commoditized business. That is not true with molecular diagnostic tests, which can be so precise person to person. And so we're now seeing budgets opening up in that realm as well. And the whole genomic revolution, we think, is going to gain more traction because of the COVID virus and the imperative to develop vaccines and tests. So again, another case in point when innovation is gaining traction during a very tumultuous and unfortunate time.
Thank you so much to Cathie Wood. It's always great to have you with us. Always great to talk about Tesla with you, Cathie Wood, because you really know that company terribly well and you believe in it. That's Cathie Wood. She's the CEO and also the Chief Investment Officer for ARK Investment Management. That's going to do it for this week, for Wall Street Week. It's been quite a week, including with those 20.5 million Americans losing their jobs, which we won't forget anytime soon for sure. I hope you'll join us again next week. I'm David Westin, and this is Bloomberg.